Hi everyone, welcome back to my YouTube channel, RBC Fan. Today we are going to talk about Royal Bank of Canada's Q4 report. The report was released on November 30th, 2022. We're going to review RBC's Q4 report and also talk about RBC's 2022 overall performance. As you may already know, RBC is Canada's largest bank by market capitalization. It's also one of North America's leading diversified financial service company. RBC has operations in 29 countries and is one of the 10 largest global companies by its market capitalization as well. So year 2022 has been quite interesting to many companies. Macroeconomic factors have influenced many sectors, including banking industry. Inflation, war, future uncertainties have impacted business performance. From RBC's Q4 report, we have noted that RBC has been quite resilient and has been generating profit for its stakeholder. So now let's see what RBC had done in its Q4 then. Now let's take a look on the RBC's Q4 2022 financial highlights. Its Q4 2022 net income is $3.9 billion, which is pretty flat compared to last year. Its Q4 2022 diluted EPS is 2.74, grew by 2% year over year, which is great to see. I always like to see the growth, no matter how small it is. The provincial credit loss is $381 million. In case you don't know what this PCL, it is pretty much the potential estimated loss that RBC anticipated. So this is the money that RBC will prepare to pay for the loan that RBC can recover from its borrowers. So since this number is also part of the expense in its financial document, if this $381 million doesn't exist, it means that RBC's net income of $3.9 billion will be increased accordingly. So hopefully that tips helps. So we also take a look on the Q4's ROE of 15.6%. It's down 130 base point year to year. We don't like to see it, but it's okay. I still like to see the ROE of 15.6%. It's still considered to be pretty good, considering how big the company is. So if we compare the Q4's financial highlight to the Q4 2021, we're seeing that the net income remains the same. The diluted EPS increased by 2%, but the ROE and CET1 ratio, they both drop. So the CET1 ratio is an indicator on how good the bank is, how healthy the operation is. So we always want to see this CET1 ratio to be higher. The higher the better, to be honest. So if we compare the Q4 2022 to the Q3 2022, just from the previous quarter, we see RBC has delivered a 9% growth in the net income, another 9% growth in its earnings per share, which is very good to see. So considering on the macroeconomic factor we've seen so far, I'm very surprised to see that RBC is able to pull this out. Even though that the ROE has and the CET ratio dropped a bit, I still consider RBC's Q4 result to be quite good. I actually like it. You may wonder what kind of business RBC has been doing. Like where is the business coming from? What do they do? Where do they get the profit to provide to its shareholders? So RBC has 5 business segments. It has personal and commercial banking service. It has the wealth management segment, the insurance, the investor and treasury service, and the capital market. So personal and commercial banking and the wealth management, they are the biggest source of income source for RBC. And we can see that PNCB grow 18% year to year, and the wealth management segment service grow 15% year to year, which is very good. So since these two are the biggest income source for RBC, the better they grow, the happier the shareholder will be. Now let's dive into the details of the business segment for RBC. So you can see that the personal and commercial banking provides 53% of the earning for RBC. The next biggest earning source is the wealth management. What comes after that is the capital market. And most of the earning for RBC has made is from Canada, which accounts for 60%. The next one is the US, 24%, and raises fund in the international, which is about 16%. The most of the income is classified as a net interest income, which is 46%, and the non-interest income of 54%. So since personal and commercial banking and wealth management are the biggest income source for RBC, we can see that the net income had been increased from last year. So for the personal and commercial banking business segment, we have seen a $106 million increase, or about 5% growth from the year ago. It's primarily due to the higher net interest income, reflecting the higher spread from the high interest rate and strong average volume growth of the loan. So same apply for the wealth management. It sees a $264 million, or about 47% growth from the year ago. It's also due to the higher net interest income reflecting the high interest rate, which we'll see later on to talk about why it's contributing to the business segment. Now we're talking about the return on equity. 30.5% for personal and commercial banking. It is okay. Like anything above 20% is considered to be exceptional. Now we say the ROE for 15.6% for wealth management is very decent. I really like the number. Ridiculously 46.7% ROE for insurance business segment. Are you serious? Anything that is above 20 is already considered to be exceptional, and we are seeing a 46.7% for insurance. It is a business RBC should really invest to, but to be honest, there are so many banking industry like company the competitors will really take a piece of pie of that. So let's see what RBC is going to do. By all means, all this revenue adds up to be about 12.6% for RBC's revenue in Q4 2022. And with the efficiency about 40-ish%, I think, we need to do some calculation later on, it generated a net income of $3.9 billion. So 40% return. Every dollar you invest, you get almost $40 back, 40 cents back, I should say, is actually a really good deal. So now if we look at the net income chart compared to the Q4 2021, we can see that the personal and commercial banking has grown. So is the wealth management, the insurance, and the investor and treasury service stay relatively flat. The capital market will see a loss already, but it's really due to the macroeconomic. We can dive into the details if you're interested. If you have any more comments or thoughts, please leave a comment below and we can talk about it. After we have to review the business segment and its performance, now let's take a look on the Q4 2022 summary. So its revenue, $12.567 billion. It's with all the non-interest expenses spent. Now we talk about the pre-provision rate of $5.2 billion. Deducted the provision for credit losses. As we talked about earlier, the PCL is considered to be the expense in the financial document. So after the deduction, we're talking about the net income of almost $3.9 billion after the taxes. Its diluted per share is 2.74, 2% growth year to year, 9% growth quarter to quarter, which is good to see. So return on common equity of 15.6% is good to see. So this is the highlights for RBC, and I think it is a very strong, resilient, good balance sheets that we're seeing. Now we can review the overall performance for RBC in the year 2022. There are three things we like to focus on today. We have revenue, net income, and the return on equity to talk about. So as you can see that the revenue for RBC in the last year had been fluctuating from $11.2 billion to $31 billion. And one of the reasons why the revenue had been changed like this are due to the change in the interest rate, the macroeconomic factor impacting the business operations, such as that the war happening in Ukraine. It does change a lot of the global business and things we just didn't anticipate back in the Q2 2022 and Q3 2022. So last 3 quarters, they were full of surprises. That's why we said the year 2022 is very interesting. So the same thing applied to net income. Because the revenue stream had been changed, the net income had been changed according to. Unless there is like a way to suddenly increase the efficiency of the business model, otherwise the net income most likely going to track down the path of the revenue change too. And same thing applied to return on equity. So that's why you can see that there's up and down for certain quarters, and all these 3 charts less or more look like the same. And now we're going to talk about the biggest change we have in mind, which is the change in the interest rate hike. and I'm going to show you why this is one of the most important factors. One factor that may influence RBC's revenue, net income so badly is the policy interest rate. As you can see from this chart over here, the interest rate was 0.25% in the beginning of 2022. But ever since then, the interest rate started to rise. And now we have 3.75% in October 2022. And every time we see a change in the interest rate, it's either the 1 base point, 2 base point, and we even see a 4 base point in July 2022. Every time we see a change in the interest rate, it means that the net interest income will be increased, but at the same time, there's a chance that the client will change its service to another competitors. Because when we talk about the business, you always want to find a good deal. And that's why I say that this interest rate change is a double-edged sword. RBC would be benefit accordingly, so its net interest income is going to increase accordingly. It doesn't have to spend extra effort for the same business, for the same operation, for the same client, but its net profit margin is just going to increase. But at the same time, the client are not going to take it as it is. Of course, they're going to find something else, find a substitute, find a new way, maybe just way further. And I don't need the loan right now. I can wait a few months to see if the interest actually die down. So as a result, that when in the earlier information we talk about, we see that there's fluctuation in the revenue and net profit. I would say this policy interest rate is one of the contributing factors contributing to the change in the Q2 and Q3 of 2022 for RBC. So how is RBC going to give back its shareholders? So most of the time we are talking about dividends. So RBC announced a quarterly dividend of $1.32 per share, which is up to 3% quarter to quarter, about 4 cents. And the Q4 22 dividend payout ratio is 47%. And its target dividend payout ratio of 40 to 50% is met. So it met its target. I think that's a good sign that the management did achieve its guidance. So the higher the payout ratio means that the company will have less cash flow for its future investment. So I'm happy to see that RBC is able to keep down the payout ratio and still manage to maintain the 8% compound annual growth rate, which is very good to see. So I would like to see RBC using the extra cash or the organic cash flow to invest into the business segment we just talked about, especially the insurance industry. Hopefully it can have more market share, and with the ROE of such high ROE of almost 47%, like the more market share RBC is going to get, meaning that there's more RBC is able to return to its shareholder as well. So here's a message from RBC's CEO Dave McKay. So I just want to point out that the CEO also pointed out the macro environment. These elevated uncertainties continue to affect the asset valuation and market volatility, with it in turn impacting the investment sentiment. So all these are something that RBC CEO just can't control. So this caution stems from the elevated housing, energy prices, political and geopolitical instability, a pressure manufacturing sector, and aggressive monetary policy stance by central bank. Like all these factors are causing those fluctuations that we seen earlier and what happened in RBC's performance overall, like speaking in year 2022. So CEO also said that while the market conditions continue to be tough, our 2022 results reflect a resilient bank that's well positioned to pursue strategic growth and deliver long-term shareholder value, which I do agree actually. So RBC has changed its business strategy according to what's going on in the market. And so far, I think it is considered to be quite successful. We don't see any drop or sudden drop in the share price. We still see a relatively stable ROE, relatively stable net income. As long as RBC is able to generate a cash flow for its business, I don't worry too much. So CEO continued to say that our premium business, strong balance sheets, prudent risk management, and diversified business model mean that we can deliver advice and services that help our client navigate all cycles, which is great. So I believe that the Dave McKay is able to lead RBC accordingly. Hopefully, is going to be more successful in the next few quarters, and we will see, because 2023 will still be a challenge year for the banking industry. At the end of the day, the analyst rating for RBC is like 63% buy. So compared to its current price, it's about a 5% variance to its next 12 months. I don't know if it's a good idea to buy, but I personally will hold RBC for the long term per se. I like its dividend. I like its dividend growth. I really treasure the long term growth aspect and how resilient business model is. Its integrated business model really outrun a lot of the banking industry in North America. That's why I think RBC to be one of the best banks in the world today. Now we have a wrap up the Q4 2022 review for RBC and kind of understand its overperformance in the year 2022 as well. So what do you think? Do you think RBC is a good business? Does it have a good management to execute its plan? Does it meet the guidance? Does it surprise you? If you like my video, please give me a like and subscribe my channel. If you want to see more video content like this, please comment below and I'll try to make more and share with you guys. Thank you so much and have a great day.